All right, so my name's Justin. My goal is to help you pass your life insurance pre-licensing exam on the first try. I'm going to cover a summary here of the way that insurance companies are owned, domiciled, and given authority. Sorry if my face is red. It probably looks a little weird. I took a bunch of vitamins, and my skin is now flushing. That vitamin B3 niacin, actually really good for you. It feels pretty good afterwards. So I made a series of videos on this stuff, and I broke down each individually. So if you want to watch those, and you'll see them in the description, you can just click the links there. But insurance companies can be owned in a few different ways. It can be a stock company, it can be a mutual company, or it can be a fraternal benefits society. Okay? So when it comes to ownership for insurance companies, it's either a stock company, a mutual company, or fraternal benefits society. A stock company is owned by stockholders, and they have non-participating policies, meaning that the policyholders do not receive dividends, the stockholders do. Mutual companies are owned by policyholders, meaning that the policyholders receive dividends, and because they own the company, so there's no stockholders, all right? Meaning that the policyholders with cash value policies, like whole life policies, with mutual companies, their cash value will grow faster. Dividends are not guaranteed, but they get them more often than not. Now, when it comes to being domiciled, a company can be domiciled as a domestic carrier. So like an insurance company that's domiciled and incorporated in Florida is a Florida domestic insurer. If it's domiciled in Texas and doing business in Florida, for example, it's called a foreign insurer. So if you're doing with a business with an insurance company that's domiciled outside of the state, then it can be a foreign insurer. And if you're doing business with an insurance company that's domiciled outside the United States, it's called an alien insurer. Now, in order for an insurer or insurance company to conduct business in a state, transact business in a state, they have to receive a certificate of authority. Okay, so once they receive a certificate of authority, they are admitted or authorized, an authorized insurer. So you can have like a stock company that's a domestic a stock company that's a domestic company authorized in Florida. Okay, so they can all kind of go together. They're not like independent of each other. They are, but they can, names can be assigned to each one, right? So, for instance, you can also have a stock company that is a foreign company authorized to do business in Florida. So if it's a stock insurer, a stock-owned insurance company that is, say, domiciled in Texas, but it's doing business in Florida, and it's authorized, has a certificate of authority to do business in Florida, that would be a stock foreign authorized company, right? Stock company, it's a foreign company, it's authorized company, it's admitted. And then you have non-admitted or non-authorized, and those are companies that are not authorized to do business in that state. So I'm going to throw a diagram up here, credit of a company called ExamFX. This is not my material, this is ExamFX's picture, but it will give you an idea of how these companies are organized there. I hope this helps you pass your life insurance pre-licensing exam on the first try. If you have any questions, just email me at jve@thejve.com. Please subscribe to the channel, turn on post notifications. It really, really helps me. Thank you.